In 2020, things changed quite quickly for many of us around the globe. Some companies did really well due to how those times affected us. While there is still a lot of uncertainty out there, some of these companies that did well because of the pandemic are actually doing far worse now because the pandemic is over. Or at least that's the story their stock is telling us. Today, we have a list of these strong dividend paying companies that are worth considering for your investment portfolio. In fact, one of these companies even caught the eye of the famous investor Warren Buffett. In today's video, we'll discuss the top 5 dividend paying stocks that are currently trading at extremely low prices due to investors being overly negative and fearful. The last time stocks were trading at similar lows, we saw investors such as Warren Buffett scoop up stocks because of it. Our list today has companies that have a lot of negative stories that have driven the price of the stock down but haven't really affected their core business or their dividend payments. Stories such as competition speculation, new acquisition worries, or simply negative impact from the last financial crash. Despite these risks, these large companies come with household names and a strong track record of longevity, making them potentially great additions to your portfolio. And don't forget, they all pay a dividend, meaning that every month, quarter, or year, you will receive income just for buying and holding their stock. All the stocks on our list today offer at least a 4% dividend yield, providing you with income and stability to weather whatever the market may bring in the coming years. Be sure to stay toward the end of the video as we reveal the popular company that Warren Buffett scooped up in 2022. To keep updated, be sure to subscribe and hit the notification bell so you can be amongst the first to know when more investment inspiration videos are available. First on our list, we have Walgreens Boot Alliance Inc., ticker symbol WBA. Walgreens Boots Alliance is a company that operates a chain of pharmacies in America. I'm sure you've at least heard of this company as they fill billions of prescription medications across America. Until the pandemic, the company hadn't been doing very well. But thanks to 2020 and COVID-19, Walgreens stores' business boomed. Their stores were important for providing people with medications and other products to help them deal with the pandemic. However, this boost provided by the pandemic has passed, and Walgreens shares fell again in 2022. There are some long-term concerns about the company, such as the possibility that Amazon could disrupt its business, as Amazon has slowly been entering the prescription medication business, and the profit margins on their convenience store side of the business could decrease as more people shop online. Despite these concerns, investors seem a little too negative about the company, which we can see as the stock price is far below other similar companies. Now, with their dividend, they could also attract more investors as things start to turn around in the stock market and people are looking for those bargains. Additionally, it is unlikely that pharmacies will be fully replaced by the internet because of strict rules on online pharmaceutical sales and because most patients do want to have that face-to-face contact with their pharmacist. And of course, they do pay a 4.7% dividend, which for ticker symbol WBA is quite rich for a company in this niche. Next on our list, another direct beneficiary from the 2020 pandemic in an indirect way, we have Stanley Black & Decker Inc., ticker symbol SWK. Now you might be wondering how the company that makes power tools, outdoor machinery, and industrial fasteners can be a beneficiary of the pandemic. Let me ask you this. Did you do any renovations or know of anyone that did renovations during those lockdowns? I thought you might, Stanley Black & Decker had a very successful period in 2020 and 2021 as people spent more time at home and wanted to improve their houses and do renovations. However, now that the economy has reopened, the demand for these products has gone back to normal levels. Tools are durable goods, which means that people who recently bought equipment from Stanley Black & Decker are unlikely to buy it again for a while. You're not going to buy more of the same power drill, are you? And as a result, the company's profits went from being very high to much lower in a short period of time. In the long term, however, the profits of the company are expected to return to normal levels. But that's not how the stock is priced. At its current price, investors believe that Stanley Black & Decker will continue to see sales of their power tools fall below pre-pandemic levels. Now may be a good chance to get this stock at a bargain. And remember, this is a dividend stock list. So in addition to its discounted price, Stanley Black & Decker's stock also offers a 4.1% dividend yield. If you like these kind of videos and want us to find different stocks for your investment portfolio, be sure to leave us a comment down below. Also, all the names on this list can be invested in for just $5 if you use the Webull and their fractional share purchase program. So, with just $25, you could get all 5 of today's companies and start earning dividend income right away. Links to that will be in the description down below, and you'll even get some free stock to get started. Now back to the video. Next, we have the company that I'm most excited about, International Business Machines Corp, otherwise known as IBM. Ticker symbol IBM. For a long time, IBM was seen as one of the best stocks to buy if you wanted a dividend. One of those no-brainer companies to invest in due to IBM being a name that both businesses and regular everyday customers like you and I regarded as a leader in technology. But that ship has sailed. No longer is IBM the king of computing. But now in 2022, things have changed. IBM stock has returned so far a total of 18%, even when other tech companies and the overall market has gone down. So why then is everyone suddenly interested in IBM? Well, one reason is that IBM has started making more money again after a few years of not doing so well. They also bought a company called Red Hat, which has helped their cloud business. Now, cloud businesses are kind of like storing information on the internet. Another reason is that people are more interested in companies that are making a lot of money right now, instead of just thinking about how much money they might make in the future. So even though IBM is a big, slow-moving company, they still have a lot of solid long-term relationships with other big companies that make them a lot of money. Now, IBM may not be as exciting or interested as other tech companies, but they're still a good choice when it comes to dividends. Now, speaking of dividends, they are paying a 4.4% dividend yield, and there is a great chance that their stock could go up even more as they start taking away businesses from a lot of other cloud computing companies. IBM may just be one of those companies that is in the tech sector, but still a great buy when you're looking for safe stocks. Next on our list, we have a bank. US Bancorp, ticker symbol USB. USB, which is one of the largest banks in America, are the parent company of the more widely known US Bank. This company helps individuals and businesses with banking services like loans, mortgages, credit card, investment, and financial planning for those with a lot of money. In the past, this had helped the bank become very successful and make a lot of money. However, in the past few years, US Bancorp's business had not been doing well, and, as it's used to, the stock has not performed well either. But this might change in the future as US Bancorp has recently finished buying another bank called Union Bank from Mitsubishi UFJ Financial Group, which will give it a stronger presence in the West Coast. Additionally, when interest rates go up, banks like US Bancorp that focus on consumer banking tend to do better. With interest rates being higher and a better network of branches, along with that low stock price, US Bancorp stock is likely to be a good choice for 2023. Additionally, those interest rates, they are going to keep going up or probably will remain elevated for at least the foreseeable future. Bancorp's stock is currently yielding a 4.3%, so that's not bad either. Lastly, we have that company that Warren Buffett bought over 55 million shares of. Ticker symbol C, Citigroup. Citigroup is one of the biggest banks in the country, with a vast retail banking operation and a presence in investment banking and international markets. Despite its size though, Citigroup has a troubled reputation, having struggled during the financial crisis of 2008 and of course making some questionable decisions afterwards. While its checkered past lives in investors' minds, Citigroup's stock is a bargain. Its shares were selling for just 6 times earnings and less than half of their book value, even as the bank's operation results were on the rise thanks to higher interest rates. In fact, Citigroup was earning its highest return on equity since 2006. Now, these attractive valuations caught the eye of legendary investor Warren Buffett and his company Berkshire Hathaway. And in 2022, Berkshire Hathaway purchased a large stake in Citigroup. With Buffett's track record of success with financial stocks, value investors began to take a closer look at Citigroup and its generous 4.5% dividend yield. While you might not be in the business of buying 55 million shares like Mr. Warren Buffett, Citigroup is a great addition to your portfolio if you're looking for stocks that are paying a dividend and are currently at a bargain price. Now, were you surprised that Warren Buffett bought such a large amount of Citigroup stock? Do you think it's time for you to add Citigroup to your investment portfolio? This completes our top 5 dividend-paying stocks that are from companies that are relatively beat up right now. For more dividend-paying stocks, be sure to click the playlist of all the top dividend stocks for 2023 and beyond.